Accounting equation and Excel. Advanced customer payment, which sometimes can be recorded as unearned revenue, method number 2. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation, using Excel. Here we are in Excel. If you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you may want to begin back there or just construct your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook though, 4 tabs down below. First, a word from our sponsor. Yeah, actually we're sponsoring ourselves on this one, because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever. Because our merchandise is better than their stupid stuff anyways. Like this CPA thinking cap, for example. CPA thinking CAP, you see what we did with the letters? And this CPA thinking cap is not just for CPAs either. Anyone can and should have at least one, possibly multiple CPA thinking caps. Why? Because based on our scientific survey of 5 people, all of whom directly profit from the sale of these CPA thinking caps, wearing this CPA thinking cap, without a doubt, according to the survey, increases accounting productivity tenfold. Yeah, at least. Yeah, apparently the hat actually channels like accounting energy from the quantum field ether directly into your head, allowing you to navigate spreadsheets faster. It's kind of like how in the Matrix when Neo learns Kung Fu, or at least that's what the scientific survey's saying. So get one, because the scientific survey participants could really use some extra cash. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. Example, month 1, practice, month 2, example, in essence, the answer key. Month 1, prior month of operation, practice tab, having pre-formatted cells so you can practice the practice problem with less Excel formatting. The month 2 tab, the one we will be working in, is the current month of operations, where we started with a blank worksheet but are basically working within a template at this time. However, we will be adding to that template as needed as we go, practicing our Excel tools and formatting as we do so. Let's go to the example tab to get an idea of what we will be doing this time. Remembering we're recording our bookkeeping with the accounting equation. The accounting equation basically acting as our trial balance from which we can then construct our financial statements, the major reports being balance sheet, income statement, statement of equity. The income statement, you will recall, sometimes called the profit and loss report. We've been looking at this idea of advanced payments, remembering that advanced payments is usually a specialty type of area because most types of businesses get paid either at the same point in time they do the work, like at a cash register, or possibly at a sale, like on a website, for example, or they invoice the client doing the work first, then getting paid after they invoice the client. But sometimes we get paid in advance, and remember there's many types of industries where this could be the case. Rental industries where you might have the last month rent or at least a security deposit or something like that. Any kind of subscription models which are becoming more popular for software and online services, for example, as well as concerts or things like that, magazine subscriptions and so on and so forth, or possibly prepayments for a larger purchase in order to show commitment by the customer for a long-term project that is being worked on, or possibly in order to order something like we are doing here, such as an expensive guitar, where we're saying if you want a custom order from us, we would like a down payment to commit on that order. So as a bookkeeper, we have to determine, do we want to specialize in those types of clients that are going to have this prepayment issue? And if we do, those are going to usually be particular to a particular type of industry. And then how are we going to do that to make it as easy as possible for both the bookkeeping side of things, which is needed to communicate with the client, which is a little bit more difficult when we have a situation of a prepayment or deposit, because that takes some more interaction with a client, as opposed to if we're just at a cash register, we don't even need to know what their name is, right? They just give us the money, we give them the food if it's a restaurant, and that is it. Or if they buy something from a Shopify store, then it's usually pretty straightforward. They pay us at the point in time that they purchase it and we ship it out, and that's it. But if it's a prepayment situation, then we've got to tie out the fact that they already paid it to something that we're going to do in the future, and then invoice and tie out basically the invoice to the prepayment in some way. Remember the major problem that we looked at last time, which is what I would call method number 1, is the idea that if I get a prepayment, then the accounts receivable is normally the account that we use to deal with the subledger or activity from customers. But if I get a prepayment, it shouldn't go into accounts receivable. It should go into some kind of liability account. So the reason that's a problem is because, why is this black right here? The problem is we have a logistical issue that deals with the customer subledger. In other words, if I want to track the information and communicate that information to customer by customer account, I typically look at a subledger, which would be basically a report in a software like a QuickBooks or Xero that will be related to the accounts receivable, breaking out the information of the accounts receivable account, not by date as is done in the general ledger, but basically by customer. If, however, I get a prepayment, then it shouldn't go into accounts receivable, even though it deals with a customer. It should go into a liability account like unearned revenue. So then what am I going to do with this screen, which is supposed to help me to then communicate with customers? Am I going to have a subledger that now is going to give us the detail of 2 accounts, one being an asset, accounts receivable, the other a liability like unearned revenue? Or do I have another subledger that I have to go into separately that deals with the customers that are having the prepayments? And if that is the case, then when I close out like this unearned revenue subledger, then I'm also going to have to record that information over here into the accounts receivable ledger. So you can see there's a logistical kind of complication or issue with the subledgers that you're going to see in practice, which you might not see in book problems, because they don't really deal with that logistical issue with unearned revenue problems in a book problem. They just say what you're supposed to do is increase the liability because you own it back, or you owe it back from an accrual standpoint, and then you just figure out how much you still owe at the end, and then you do an adjusting basically journal entry. But in practice, of course, we have to communicate with the customers, and we need basically the subledgers in order to do that. So from a logistical standpoint, we have to be thinking, do I want to deal with the clients that have these type of subledgers or prepayments that I would have to deal with that have this liability component? And if so, how does that work with the accounting system and software that I am using? Thinking about first, I would think about the ease of use from a bookkeeping standpoint rather than a financial reporting standpoint, if I can do adjusting entries to clean up the financial reporting. Or if I can do both at the same time, that would be great. I believe a Xero software, for example, has a system that tries to record the liability properly while still making it easy to manage the subledger reports to deal with the customers. But sometimes the software, it might be easiest, as we did method number 1, to say, hey, look, I'm just going to record a negative receivable so that I can clearly see it in the subledger, the payment happening before I do the invoice. And then when I invoice, I can just match those 2 up. That's the easiest thing to see. And it's the most clear-cut subledger because I only have 1 subledger dealing with 1 general ledger account rather than, in essence, 2 subledgers or 1 subledger that has to deal with 2 general ledger accounts. All right, but this time we're going to do method number 2 and show you what would happen if I had this second subledger and try to parallel that to say what might happen in a QuickBooks if you use a different type of method, or what you might see happen if you see accounting software that's trying to make an easy system to deal with this, report both properly as we do the data input as a liability, and give you an easy subledger to work with customers. It's going to add a little complication no matter what, although the software can automate the process a little bit more easily. And what we want to do is be aware of it so we know what is happening and how to, make a system around it. All right, let's go to the month 2 tab, and we're going to say on 227, let's say now we got another advanced customer payment. This time it's going to come from Music Stuff Store. So that's our customer. They paid us $100. So remember, the scenario here is that someone comes in, they're going to say, hey, look, I want a guitar. And maybe they call it in, right? They call in, they're like, I want this particular guitar, and I saw it before. It's got this color on it or something, and I want that. And we're like, okay, but that's a hot topic, man. That guitar flies off the shelf. So if you want it, you have to pay us a down payment at this point in time. And then maybe when you come into the store, or maybe we'll ship you the guitar after that, after you've committed to at least the down payment portion of it, and then we'll bill you or invoice you for the rest of it. Now, how that might happen is we might make an estimate form, which doesn't record an actual transaction, but mirrors an invoice in order for us to calculate the total cost, on which we can then create, say we're going to take like 10% or whatever it might be as the down payment. And say you give us this amount of the total cost up front, and that would be the idea. So the estimate form wouldn't record anything, but look like an invoice, which is another form that we might track, but doesn't actually record anything. And then when we record the payment, using QuickBooks terminology, the form that we used last time was a payment form. And notice the payment form is always a form that deals with accounts receivable and is usually made after the invoice so that it can link the payment form to the invoice that was created. But before, what we did is we made a payment form without having an invoice, which left us with a credit balance, they call it, right, on the account, which is great for us to see perfectly from a bookkeeping standpoint, but results with a customer that has a credit accounts receivable, which shouldn't be the case, because that means we owe them money or the goods and services. It should be recorded as basically a liability. So from a QuickBooks terminology, we could use another form called a sales receipt form, which is usually the form that you can think of as the cash register form. But we're going to adjust that form to say, I want you to record it not to revenue, but I want you to record it to unearned revenue. So from a journal entry standpoint, that would give us the proper journal entry, right? So we're going to say, okay, well, if that happened, we're going to record it into the proper journal entry here, which is going to, let's put it into unearned revenue instead of cash, or undeposited funds. Sorry, undeposited funds. I mix up undeposited funds and unearned revenue. Hopefully that doesn't totally destroy people's understanding. And then I'm going to make another account going to unearned revenue, which is our liability account. So I'm going to put my cursor on column Z, right click and insert. And I'm going to go to the right and call it unearned revenue. So I'm going to make this a little bit larger so I can pick that up. And then I'm going to select this entire column to format paint it. So I'm going to go all the way down to copy the formatting, because I don't have the formatting perfectly over there, and go to the Home tab and Format Paint. And then I'm just going to use my arrow keys, arrow to the right, and it should apply that entire format over. Okay, so now what line was I on? I'm on all the way up. And then, so we are at this 100. All right, pulling that 100 back on over. We're going to say that goes into unearned revenue. So that goes up. That's correct. So let's put the zeros across the board. 0, 0, 0, 0, 0, 0. So it didn't hit revenue, and it didn't make a negative receivable this way. It went into unearned revenue. However, the subledger has an issue, right? Because now, like, I'd like to put it into music. What is that? What it was? Music Stuff Store right here. This is not the right. Well, it's the Music Stuff Store. It should go into the customer account here, but I can't do that because this subledger only deals with the accounts receivable, and it will not then tie out to the accounts receivable. So I could try to make this subledger tie out to both the undeposited funds and the accounts receivable, but that would be kind of funny too, because then I'd have to like subtract those two accounts out in order to tie out to the subledger. So I could say, in theory, I could say, okay, well, let's make another subledger over here, which I'm going to call the unearned revenue subledger that supports the customer accounts that are liabilities for the prepayments. So to do that, I'm going to put my cursor on the BD column, and I'm just going to scroll over a few columns and then right click and insert. And then I'll make these a little bit larger. Let's just make them a little bit larger here. And then maybe I'll just copy the formatting that I have here. So I'll just go from Z to BB, copy that, and I'll put that right here, Control V, and then I'll just change the name to unearned revenue. And then this is still going to be equal subsidiary ledger. And then maybe I don't need to, we'll keep two columns. I'll just say the total. So what I have here is just going to be the name of Music Stuff Store. That's our customer name. All right. So then the customer name is that. And okay, now I messed up where's the last row I was on? I was down. That's why the zeros are useful. There's the row I was on. So I'm going to put that here. This equals an increase of that unearned revenue, the 100. So now I have a subsidiary ledger. The running balance, I'll put 0. Oh man, let's scroll down. So that's going to be here, and this is going to be equal to the one above it plus the sum of these two. So let's do that again. And then I can copy, I'll just copy that all the way down to here. So the bottom line, so there's the 100 that pulls over. So now I have a subsidiary ledger that ties out to this unearned revenue, but it still deals with customers. So that's great, but you could still imagine the problem that's going to happen is that when the customer comes in and I have to give them the information, then I don't see it here on the accounts receivable area. I see it on the subsidiary ledger. Now, in a QuickBooks system, you will see it in the accounts receivable area, because the thing that we used to record it was the form that we usually use for a sale at a cash register. We just didn't record it to the revenue account, but rather to unearned revenue. So you would see it here in a QuickBooks system, but it would look kind of funny because it would look like the form that would be used for a sale but rather than having a sale, we recorded it to unearned revenue. Okay, so let's put a underline across here. Put an underline, home tab underline, and we'll select these two and underline here, and then we'll bring down the balance, This is going to be equal to the sum prior balance plus the current activity. I'm going to copy that. Let's do it with the keyboard now. Control C, going to the right, holding down Shift, going all the way to the right. But I'm not going to say Control V because I want to paste it specially. Formulas only, special pasting. There we go. All right, let's copy down this bit so that looks correct. And then we will copy down our balances. Copy down the balances. So now this is wrong. Why? Because if I double click on this one, it's not picking up the new one that I put in here, that 100. So I got to pull this over here so it picks up that 100. All right, so now we're good. And now this one, if I copy that down, should be correct. Okay, so now we're going to turn around and say that we're going to invoice the client now for that $100 like we did before. So now we're going to say, all right, what happens when I invoice for inventory, and I'm going to apply the credit. And so I'm going to apply advanced pay, advanced pay. I don't know. Music stuff store, and I'm going to indent that. So we're going to say that we sold an EPSP. We sold one of those. Let's do the indent. Now, before, you will recall in the prior method, all we had to do was record the invoice like we normally would, without having to adjust the transaction to the invoice, and then we put the customer deposit on the bottom of the invoice as an informational thing. Whereas here, what we're going to have to do is take into account the unearned revenue as part of basically the invoice that we're going to create. So I'm going to say, all right, let's see what that looks like. So the accounts receivable is going to be we're going to say let's put the amount over here. It's 600. That's what we're going to sell it for. We'll deal with the inventory later. So it's going to be this equals the 600, and there's only one of them, times the tax rate, which is 1.05. Let's just do the normal transaction, and then I'll come in and fix this one. And so then I'm going to go, okay, then normally what we do is we go over here to the sales side and say, okay, this is going to be the 600 on the sales side of things. Boom. And then we go into the sales tax and say sales tax is going to be the 600 times the 0.05, which is the amount that we have to charge for sales tax. And that's our normal transaction. That would put us in balance, although we still have to deal with the inventory, but that's the sales half. That's what the customer would see on the invoice usually. But now we can't just apply the credit in the same kind of way because the credit was done. It's basically posted to the other subledger, right? So what I have to do is lower this unearned revenue. I don't have a negative receivable. In other words, the prior method already had it net out in the negative receivable, so the account would be correct. But the account isn't correct for accounts receivable. It needs to be lowered by the $100. So what I have to do is in the unearned revenue, in order to apply the credit, I have to say negative of the unearned revenue, which then needs to pull into the accounts receivable. So if I double click on the accounts receivable, I have to say that minus $100. So now they still owe us the 530. So if I put this, let's put zeros across the board, and then we'll talk about that for a second. Zeros across the board. Okay, so now on this subledger we've got music stuff store, which I think this is new music stuff. We have the music stuff store is right here. So on this account now, for this subledger, this is going to be equal to the 530, and then in this subledger, I'm going to say this is going to go down by, in essence, the 100. So now if I copy this down, now the unearned revenue subledger is now down to 0. So if I scroll back on over here and I net these two out, once I total this, it'll be down to 0. And then this one, if I copy the balance down, should be at the 20,956. Let's check that one out. So if I go over here, summing these two up, we're at the 20,956. So that looks correct. So notice this works, but notice it's a little kind of wonky, right? Because I had to record here, this invoice is recording. So if I looked at the form that I'm giving to the client this time, the invoice form is going to have the inventory line items, which was this plus $100, 630, and then it's going to have another line item up top in the inventory form that'll be a negative amount to apply out the credit. So you can see the credit applied, but it'll be in like the top part of the invoice as basically an item, almost looking in the same area as like the inventory items. And the full invoice, when I look at the invoice, it doesn't look normal this way, because normally the invoice is going to have, like we saw up here, the payment is going to be matched out to the invoice. The invoice will record the entire amount that for the guitar plus the sales tax, and then we tie it to the 300, which means at the bottom of the invoice, for informational purposes, it'll tell the client what is still owed on the invoice. Whereas if I look at this one, what happened is that in the top part of the invoice, you're going to have that in this case $100 up on the top part in order to record the transaction, shifting it from unearned revenue over to the accounts receivable, because they were recorded in two separate accounts. So from a bookkeeping standpoint, in my opinion, it's easier to see this because you're using all the same forms that you would normally would, and I'm recording the full invoice and then linking those two things together. Whereas here, at least in like a QuickBooks, you have to do kind of a workaround and use items in a way that's a little bit less natural. And even if a system like a Xero does that kind of for you automatically, it's still a little kind of more wonky in some ways because that's just the way it is, right? So those are the difference in the forms that will basically kind of be looked at. So if I looked at like the detail in a QuickBooks, what would happen is I would have now, instead of a payment form, I would have the sales receipt form, which usually means a sale at a cash register, but I used that to record the prepayment into undeposited funds. And then the invoice over here is going to have the normal invoice information, but using an item, which is at the top of the invoice, it will have another item that basically records the credit up top. Whereas over here, we would have used a payment form, which would record a negative accounts receivable in the same accounts receivable account, which is incorrect because it should be a liability, but is easily then tied to the invoice, which I can then make an invoice for, which would just be a normal invoice. I wouldn't have to put anything up a transaction in the top of the invoice, but rather link the invoice to the prepayment, which would then put an informational thing at the bottom of the invoice, not recording anything, but giving the information of what is still due from the customer. So again, I know that gets confusing for people to look at, and I know it's different than what happens in a book problem, because in a book problem, we don't deal in detail with these subledgers. We just deal with the theory of the accrual concept and when we should record something as an asset versus a liability, which is in theory the first thing that kind of we should get down. But logistically, you have this issue in practice. So those are, in essence, the methods. So let's bring down the balance here. I'll bring down the balance, and then let's put an underline across the board. Underline across the board. And we'll copy this down. And then we'll copy this down. And then we'll say this equals the sum of this and this, and then I'm going to copy that, Control C, and then I'm going to hold down Shift and scroll all the way to the right, do as much as I can with the keyboard. But then I'm going to right click on this. You're probably going to tell me, hey, there's a keystroke for that, but I don't know what it is. I'm going to say paste the formulas only, and then we'll bring down the balance here, and then I'll bring down this one, and so that's good. And so that looks good thus far. We still need to do the inventory side of things though. So let me put this is an EPSP. So let me just go up there and find that. So I'm just going to go all the way to the top and then to the right. It's a EPSP, finding our subledger. EPSP is down here. So it's right there. So we had the prior balance was here. This is on 227. We're going to sell one of these. They cost 480. So that's going to be 1 times 480. Bringing this to the inventory side, 1, 480. This equals 1 times 480. Let's put an underline here. Home tab font group underline. Let's sum this up, equals the sum. 4 minus 1 means we have 3 left. They all still cost 480. So this is going to be 3 left times 480. I'm going to make this green so I can then find it. We'll make it light green. All right. So then I'm going to go all the way to the right and record that second bit that we haven't been focusing on, but need to record. That's going to be the inventory, which is going to be equal to, I'm going to find the cost. I'll say negative because it needs to be a negative. Scrolling all the way up. This is an what was it again? An EPSP, but I made it green. I don't even need to know because I made it green. So there's the green, there's the 480. Boom. And so then the other side of it is going to be here on cost of goods sold, 480. So the net impact on net income is still the 600 minus the 480, but the net impact on the assets is only 530 minus the 480 because we had this the sales tax, but also the unearned revenue situation taking place. That should still put us back in balance here. So we're still in balance. Let's look at our subledger. So our subledger for inventory is at the 4746. I'm going to go all the way to the inventory again and adjust our check number to the current subledger. So I'm going all the way over to the inventory. By the way, I don't need these added cells over here, these added columns. So I'm going to make a skinny BI column, putting my cursor on this column so I get the same width. Home tab, format, paint. Let's make a skinny BI. And then I'm going to delete these two. Going from BG to BH, right click and delete. Double clicking here, deleting that second bit. Putting my cursor back down, going all the way to the left. All the way down. Going to the inventory. Inventory is the 4746. And that puts us back in balance. So now this is the ending balance of all those, and green 0. So that looks good. We're good to go. All right, let's go back on over. Scroll back down. I think we've properly recorded it finally now. So now if I look at my income, wait, I need to bring down the balance. Bring down the balance. And then put an underline here, holding down control for non-adjacent cells being highlighted at the same time. Home tab, font group, underline. All right, so then if I go on over to the income statement, this is what we have thus far on the income statement. So if I highlight these, I'll get the total of 2416. I could add that to the beginning balances for the prior month, and we would get to a total for the 2 months of 9844 thus far. That's where we are thus far. Okay, so that I think that does it. So those are the, again, couple methods, a little confusing. So mull that over. Something to consider when you're picking up clients that have prepayments. How exactly is that going to work? Remembering, I would want to make it as easy for the bookkeeping process as possible. Just like when you're thinking about the bank feeds, how can I utilize the bank feeds? I want to automate as much as possible. And if that means I have to do a few more adjusting entries in order and as accommodation to make things automated, that's probably the best way to do it, right? As long as everybody's on the same page. And similarly here, if I can make it easier for us to communicate with clients, collect on the money, not miscommunicate with clients, I'd rather make that easier than have the financial statements completely correct mid-period and then just make an adjusting entry in order to make the financial statements correct, making sure that everybody's on the same page so they know how to do that adjusting process and what the game plan is.